Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about warning all attempts failed. Could not retrieve company long name, EXA, annual report. American Exceptionalism Acquisition Corp A is a company focused on acquiring other businesses through various means. The company's primary objective is to merge, amalgamate, or acquire one or more businesses, either partially or entirely. This can be achieved through a share exchange, asset acquisition, or reorganization. The company was incorporated in 2025 and has its headquarters in Menlo Park, California. Its business model revolves around identifying and acquiring companies that align with its goals and objectives. By doing so, American Exceptionalism Acquisition Corp. aims to create value for its shareholders through strategic acquisitions and growth opportunities. However, the provided text does not explicitly mention the list of businesses or services that American Exceptionalism Acquisition Corp. is currently providing or planning to provide. It only highlights the company's focus on effecting mergers and acquisitions as its primary business activity. Unknown market capitalization of $1 billion is materially smaller than most of its industry peers of roughly $33 billion. Unknown trades at a lower price-to-book ratio of -8.32 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The balance sheet appears very conservative, with liabilities representing only 6% of total assets. While this indicates low financial risk, investors should examine the composition and quality of the company assets to determine whether they justify the current valuation. The primary drivers of revenue growth or decline are multifaceted and influenced by various factors. One key driver is changes in international trade policies, which can significantly impact a company's ability to export goods and services, page 29. The performance of a single business unit also plays a crucial role, as it can either contribute positively or negatively to the overall revenue growth, page 36. Another significant factor is the initial business combination, where two or more companies merge to form a new entity. This can lead to increased revenue through economies of scale and expanded market reach, pages 51 and 57. The trading price of Class A ordinary shares also has an impact on revenue growth, as it affects the value of outstanding shares and potentially leads to increased investor interest, page 51. Additionally, the conversion of founder shares into Class A ordinary shares can influence revenue growth by increasing the number of tradable shares and attracting more investors, page 51. Overall, these factors demonstrate that revenue growth or decline is driven by a combination of external and internal factors. Based on the extracted summaries, it appears that the company is not generating positive operating cash flow. The evidence from page 57 explicitly states this, while page 58 further confirms this by indicating a negative or unknown operating cash flow. These findings suggest that the company's current financial situation does not support positive operating cash flow. That concludes the financial summary for warning all attempts failed. Could not retrieve company long name, EXA. Feel free to comment below, and I will be happy to answer them when possible.